on a side-by-side comparison of pound yen on the left side and Tesla on the right side. And to the average regular person, like, oh, it looks the same.
Yeah, it looks the same. Ooh.
Oh, good. What do we have tonight? We have price action. Price action in different markets. So that's kind of what we're just discussing in this week's action. But tonight we're gonna be going over just a general, like, talking about the different markets, the different price action, the different characteristics of each market. They all have their own unique characteristic that you start to notice as you analyze charts. And we just want to go over these things because it's vital. It's gonna always be. We're always gonna continue to use price action in our trading, because at the end of the day, that is the only true thing, right? It'll outlast news. It'll outlast announcements, events. At the end of the day, price is the truth. So, with that being said, let me go share my screen. Let me see this. You guys can see that, right?
Yes, sir.
Yes, sir. Price action. Let me go fix this real quick. Okay. So markets are charts and numbers. You can trade it all. Plain and simple, man. Right? Numbers, charts, candles. You just cover what pair or what stock you're looking at. They kind of look the same. But a few minor things that you might be pointing out. So we got different markets, right? We got the crypto market, equities, forex, bonds, futures, commodities. These are all different types of markets that can be traded currently, especially in the U.S. Legally, without any back channel freaking bougie, bootleg stuff. Like, these are legit markets, legit securities. These are regulated. That's the key word you want to look for. Crypto is still in that gray area because it's fairly new. But as far as all the other markets that's available to us to trade, though they are all regulated. So we're just gonna go over each of these markets and talk about different characteristics and what kind of influences how the market trades, somewhat influence price action, right? Just things to look out for as of now. So crypto, right? It's a fairly new market, less than a decade old, right?
Yeah, I
Less than
think
a
it came out in
decade.
2008 officially.
8? Yeah, doing math right. Oh, a little bit over. Well, to be traded.
Yeah, it wasn't on like Trading View and like the exchanges. You're right about that. Yeah.
Yeah. Okay. Okay. Crypto is open 24/7, so even on the weekends, the crypto guys are hard at work or just busting their brains out. um, it can be heavily influenced by fundamentals, meaning um, price can move with like frequent. It can move a short period of time, like a lot, with like tweets or news from a country, China banning crypto, Elon Musk promoting Dogecoin, the memes, right? All those things can be influence fundamental crypto. The crypto updates on the different platforms, right? Ethereum, Cardona, got their own things going on. So those are things that can help. They're like catalysts for the market, right? Yes, be aware of them. And you're just gonna see overall just different price action compared to all the other markets. So that's kind of like summing up crypto. We got commodities, gold, cocoa, coffee, orange juice, live hogs, lean hogs, oil, freaking natural gas. So some of those things that help drive the market is like supply and demand, seasonality, winter. If you go over just looking up natural gas charts, winter time, it spikes up because the demand gets higher. People use it and you need to stay warm. Gold, on the other hand, that thing, I can't say there's like certain things that drive it. You know, it's always an active market that is traded. Silver, if you guys go back into that story of the what is these brothers trying to corner the silver market, and then they were trying to, I think, bring it down, but price went rocket up to like $50 an ounce at one point back in the early 1900s or something. You're gonna see that. Yeah, you're gonna see how like those things did happen with these precious metal markets. It moves, and there's no like one thing that drives these markets, you know. Okay, but you're gonna see common characteristic. Anything you want to add to that?
No, that story sounds like it's fascinating. It sounds like they tried to manipulate the market, you know, but they couldn't. It's probably too big already, kind of like a cryptocurrency, you know, it's too big to be manipulated.
Next, we got the Forex market, the biggest market. $5 trillion are traded in this market. Big banks throwing money around like they literally got their printers on. It's the biggest market, but it's just a little bit easier. It is easier to analyze, but it doesn't mean it's easier to trade. You know, if you look at the chart, as we're gonna go over later tonight, we're gonna just do a comparison between these different markets out there. There's very little gaps in the charts that you can see when you trade these pairs because the data is pretty much there, you know, which is good. Equities and stocks. Apple, Google, Berkshire, all those guys. Those are only active during New York Stock Exchange openings, right? So 3:30 a.m. about our time till 11 a.m. our time. That's the window of opportunity for the New York Stock Exchange, and it gets very active. The opening bell, you hear that opening bell. It's like Wild Wild West, man. First 15 minutes, you can make your day or end your year. So, that's what we got in equities. Futures market, it's kind of the mix, right? With price action, you will get lots of data, you'll get activity, except they are open past, they'll close at 11 a.m. You have to close your trades or there's not going to be trading. And then at 1 p.m. our time, 2 hours later, you're able to open up a new position in the futures market, depending on what things. But the other thing to consider is the activity. Usually at 1 p.m. our time, if you try to enter, don't expect a lot of activity. It's like a dead time. Price will move a little bit. And then until like 9 p.m. our time, yeah, that's when it starts picking up. More volume comes into play with the different exchanges starting to participate in these markets. So that is the futures. They do have gaps up and down depending on a variety of things. You know, price will just tell you what it is, right? So we can pull up a chart after and show, I think natural gas had a gap down this week. So that's for futures. You got anything else to add to that right now, Ree?
No,
Cool.
if people are a little bit more curious, it's usually the yen. Like the close is when the US dollar is transferring to the yen market, or the world rather. And then the world transfers from, like you mentioned, Glenn, 8 to 9 p.m. Hawaii's time. That's when the European pound market begins to open up. So that's what those gaps are as far as closing and opening and volume.
Yeah. Yeah. So this was a screenshot I took. If you guys can see that, I wonder if I can make it bigger. This is a screenshot I took on a side-by-side comparison of pound yen on the left side and Tesla on the right side. And to the average regular person, you're like, oh, it looks the same.
Yeah, it looks the same.
Price, if you start in the bottom left corner, price has a low, like on the pound yen, we have 136.77. Price has a low, and then it just jumps up, right? And then it teeters for quite a bit of time, and then it makes a new high, then it drops back down. So like with Tesla on the right side, you're gonna see it pops up, and you got, like, depending on what platform you use, TradingView might be looking a little bit different, but you just want to use this kind of this example is just for a side by side comparison between the forex market and equity market. On the right side with Tesla, you're gonna see these things called gaps. So one a noticeable gap is at 900. You got this green bar at 900, and then it opens up at 950. It's a 50, almost a $50 gap. Compared to pound yen on the left side, there's almost no gaps. I mean, it's just a continuation of data. Um, so if you just go ahead and let me go zoom in. So if you're trading Tesla, and oh, and like you end at that gap, you're like, oh, I don't know, it looks good, or maybe people are trying to be like, oh, it's the top, I'm gonna short it, and then the next morning, boom, you just like hit with that big gap. You're like, oh crap, you can't do much. You're locked in. You're gonna be one of those suckers, and you kind of don't want to be on that side of the trade. Um,
That's
but
due to overnight trading, right?
yeah, I
After
think
hour
so.
after hour trading and pre-market trading.
Right.
And I think that's like a premium. You have to pay extra just to trade that. It's not for
Absolutely.
the average
It's for the pros. The
retail
pros
trader.
are,
Yeah.
yeah, the pros are swinging. So I don't know too much about that overnight trading with stock market.
Same
But
here.
like Reed said, I think you are able to. So compared to that, that's why forex, they say it is a little bit easier to read or analyze, because you just have the complete data, almost complete chart. The formations are there. You can kind of see a lot of the setups, patterns if you're the pattern trader or whatnot, and it's more active than the stock market. Um, Depending on is, and it goes back to what kind of schedule you got. If you are that guy, wakes up 3:30 in the morning and trades all the way, or hopefully, I mean, maybe you trade the first half of the day, you can care less about what happens overnight, because all your attention is on the Tesla on the right side, where there are the data, and that's fine. There's people who do that, but if you are long term, or you want to trade according to your schedule, you cannot do the 3:30 thing, then forex is there, or these other markets that we're talking about tonight. Yeah. So you got anything to add to that one, Reed?
I'm glad you pulled up Tesla because that's the exact one that I was gonna pull up as well. I like it shows the perfect gappage,
Yeah. Yeah.
between a stock market and a forex pair.
Yeah,
And
and for me, it's like you have a limited opportunity to trade with the stock market. But maybe as a trader, depends. That's all the opportunity you need, which is fine, totally fine. So it goes back to preference, what style you're trading, and from there you can go ahead and just take the opportunities as they come.
Yep. And then crypto's the same way.
Yeah.
It's similar to forex, but it's a lot. I would say dangerous isn't the proper word, but it's a lot more volatile. So you could get whipped in and out of your positions really fast. Because like just today, for example, it jumped 1,000 points or $1,000, and then it dropped another 1,000. So like
You want to pull up a
600
crypto
now.
chart?
Right. Sorry. So this is the hour. Can you see my screen?
Yeah, you're good.
So like from here down to its lows near $1,000, and that's just the way it trades.
Yeah, and
Like
there's not really gaps in this market also.
yeah, so no gap. So it's very similar to forex, but just a little more challenging. Like there's no fundamental announcement regarding this drop here. Um, price action was bearish. But other than that, I mean that there is identifiable patterns and candles that you could enter the market off of crypto. So, but it's very volatile.
Yeah, that big ass wick, dude. Take everybody out and their mamas.
So it's interesting how Ethereum had the same low test here as Bitcoin, and they're two different cryptos. Let's just take a look at a random one. Dot. So Polkadot,
Polka
same
dot.
thing. So like they're all really, Bitcoin is the standard. So when Bitcoin moves, most of the cryptocurrencies move as well. But as time goes on, each individual crypto is going to stand on its own and be able to give its own price action, which is pretty cool to see. Just since we started, Glenn, we could start seeing that.
Yeah. Yeah, crypto. At the end of the day, I mean, we can continue back to my share screen. Let's see. So yeah, when we're talking about price action, it's just pretty much price on the chart, what it's doing. You know, we're not talking about news. We're talking about what the price is telling you. What story is the price creating as it creates these bars, these candles? It's forming a direction or pattern, setup, whatever, and that's how to sum up price action from.
Yep.
Oh, let me go back to here. So back to the price action, the takeaways, the overall, what we're trying to, what direction we're heading with tonight's trading topic Tuesday. You want to trade according to your lifestyle at the end of the day, right? My style may not be best for Reed. Reed's style might be best for me. But it all goes back to markets here. There's markets that's 24/5. There's markets 24/7. How do you want to trade? Try to figure out what kind of schedule you want, right? And so point one, you can trade anything if you have a robust approach. Keyword robust. Look that up in the dictionary. I don't have the proper definition right now, but I can Google it for you. But overall robust, you want to be able to have your approach be able to withstand all types of situations, whether it's slow, it's fast, it's whipsawy, it's going up, trending down. You want to have that type of approach. Number two, be aware of the different market conditions. So, is the market trending? Is it consolidating? Is it super slow? Is it crashing? Is a bubble popping? Or is the is like an IPO, you know? The bids are just coming in. So, oh, my froze. Okay. You want to be aware of the market conditions. Number 3, you want to look for active moving markets. So it kind of coincides with number 2. Look for moving markets. You don't have to sit and trade the dead markets, the inactive ones, things that's not going your way, because that's just a trap for you to lose your capital. You know, I've gone through that personally. Automatic, right? To go off of that, markets need volume. It needs volume. So, like we were mentioning, 1 p.m. our time isn't the best time to go load up on your positions. There are those one-offs, those crazy times where it is just blowing up. You know, it will happen, and you gotta be prepared for that. You can't say like, "Hey, the market's on the schedule, and it should not, no matter what, it should not move this way at 1 p.m." And then that day comes, and it's gonna be like, you know what? It reminds you who's in charge, and that's the market.
Amen.
So if there aren't any setups, you don't have to trade. Plain and simple, right? Don't force it. I catch myself as I shuffle through charts sometimes, and I'm just like, look, trying to find a reason to enter. You're fighting yourself, your human nature, your decision making process. Those are things to be aware of when it comes to this particular line. And lastly, the market is always right. Plain 2 things: market's right, the wife's right.
Yeah. Oh man, words to live by.
So I mean, those things are to just like really drill down, or remember, take that with you. Um, go through the charts, and these are just timeless advice. No, not advice, but like truths that we take on every day. We apply it. You want to apply this, and this will help you get on the path to succeeding in your trading journey, getting you to the place you want to be with your trading, right?
Yep.
So, you got anything for that one, Reed?
No, last thing is as far as the market is always right, not placing a position is placing a position. You're taking the position to not trade. So that is a smart move
Yeah,
if there's no opportunity.
yeah, yeah.
So yeah.
It's better to be trade, like if you're just getting hit left and right, like like dogs, right? They're licking their wounds. Lick your wounds on the side. It's fine. Let the market
Yeah.
do its thing. Eat your losses. I mean, keep them small, because if you're fighting that and forcing trades, that those little wounds will become deadly.
Yeah. Yeah. True.
You go full tilt. You go tilt. Yeah.
Just kind of recoup your losses.
Absolutely, absolutely. Let me go. You want to pull up some different charts and just show like other like things to point out, or differences.
Yeah. Yeah. One um chart I always love pulling up because you could really tell the difference between the stock market
Oh, look at that.
and crypto and forex. This is Bank of Hawaii's chart, and I mean this price action to the normal viewers is nuts. It looks so ugly, but with forex, starting with forex, you could see, I could see like this is a descending channel here, and like that looks just like dots, like a kid just put a bunch of dots, but after a while you get used to it. You could see price action moving, and so okay, moved up into an ascending channel, broke back down, created another ascending channel here, and broke back down, continued. Now it's just consolidating here. So That's just one example of price action in the stock market. Like so many gaps. It's very difficult to tell what's happening. But then we look at, let's pull up Forex and dollar yen, for example. Real clean. Now you could see that, okay, there's this ascending channels, descending channels, how price is moving. You know, it's a lot more cleaner. You could see the tips of the candlesticks. And actually, I want to pull back one more. Let's try one more thing to make, maybe this will help. So if we do this, and let's say we do that. Oh, there you go. So this does help a lot. So
Yay.
if there's gapping, so this is in trading view, and it's this bars pattern. And so I'll just do this again. So like, let's say I just want this section. I'll click here, drag it to whichever bar, and boom it. So it kind of fills in these gaps and it shows you what price actually did. So this is a type of price action. So it really fills in. Oh, okay. So now I could see a little more clear that, oh yeah, this is a descending channel here. So this is here, right? And that's that. So, I mean, that'll help if to identify the type of market you're in as far as bullish or bearish market. So that's stocks. But coming back to Forex and just all these, there's no gaps, very little gaps, if there are any. I don't see any on the screen right now. But you know, same thing. You could do the bars pattern here, identify it. It's a lot more cleaner though, you know. You don't really need to use that feature in trading view. Let's go with crypto. Bitcoin. I don't ever remember Bitcoin having gaps. It'll just have these wild moves out of nowhere. And that's, and like major wicks like this here.
I can show you
Yeah.
futures Bitcoin. It does.
Okay, so futures, yeah, cover some futures, Glenn, because that's a little different.
Yeah, I'll do that right here.
And maybe commodities as well.
Yeah, for sure.
Oh, okay. Wow, look at that
This is a Bitcoin. So I'm zoomed in 5-minute chart. Why did my camera just go black? That's terrible.
Your camera did go black.
Yeah. This is a 5-minute chart on the Bitcoin futures.
Ah.
Now, this futures contract is reflecting Bitcoin's price action. It's reflecting the actual spot price for Bitcoin, you know, but it does have closing periods. It's not 24/7 like Bitcoin. It closes on Friday afternoon, opens up Sunday afternoon for us, you know. So if I go to this, let me just do this. So look, I made an adjustment on my trading platform. It just shows me the New York Open times. That's the price action.
There's a lot of gaps now. Wow.
Yeah, there's no overnight action as this is what. If I just go ahead and change that back here, then it'll show more and more data. Yeah. So that's kind of what you'll see with the Bitcoin futures. So another thing, like if you want to see price action, like if I zoom into, like, this is bond 10-year treasury notes, kind of like in the bond market. So if I zoom into like a 5-minute chart, you're gonna see like less price movement. You see a lot of these these white bars, meaning price didn't really move anywhere, you know.
It's just kind of filling the gaps.
It's just like, yeah, it's kind of just not really doing much, you know. And so like right here, right, it's very less active. Look at the volume bars are just none. There's nothing happening. So you don't want to be really day trading this particular market. Let's look at corn, right? Or let's see. Let's look at corn. Similar. You're gonna see. Look at the volume, right? So these volume bars represent when the market is open. So we can just pull in. So 4:30 Hawaii Standard Time. That's when it's just pumping. You can trade it, and then it closes off about 9. It's the commodities market. They close, especially the grain market, close 9:15 a.m. So 4:30 a.m. to 9:15. That's your time to trade. Yeah, your window. But like this is zoomed in on a 5-minute chart, so yeah, you're gonna see in the off times. So if we go non-volume, you're just gonna see there's really nothing to do, right? So that's that. And then another thing to look at was like lean hogs. Let's see, or what's it called? HE. So let's zoom out to a 15-minute. So this is a lean hog futures. So I think bacon prices, hogs, gaps on gaps. But you can see that it is trending in a way.
There is a trend, yeah.
Yeah, you can see that it does trade. So 4-hour chart. Gold is very active. You're gonna see price fill up. Another one. So natural gas, that's the one I was going for. This one has a gap down. So Friday we closed $4.0.086. Open up at 3.8. So that is a nice drop there. If you were already just following the trend, you would have been short, and this move would have been awesome. Bonus right there.
Yeah.
So like these, yeah, the futures markets, they do have their own different characteristics on trading them. You just gotta be aware. And so like you can even trade sugar and cocoa, but you gotta have different market data for that. Those vary less. So like palladium, platinum, copper. Let's see. But like
It's
the
amazing
futures,
how like there's literally a market for everything.
yeah.
Is there like a retail market, like clothing? Well, I guess cotton would be the market.
Yeah, there's
You would look
cotton.
at.
But
Yeah.
like the futures FOREX side, the currency side, it reflects very similarly to the spot price on the Forex market. So this is Australian dollar we're looking at. So it's there. It's there. Volume, as we said, you want to look for, be aware of the market conditions, right? Be aware of if there's any setups to be had. So this is the oil. Market's trending down. Deep pullback. It looks like it could be just a revert. It could be reversing. So long wick here, rejection to go lower, and then finally the bears were trying to do one more. So it's like a upside down heads and shoulders, huh?
Yeah. Inverse.
Inverse. So all right, and then now the bulls are going. Price pulled back. Nice entry to go along.
Nice.
That's oil futures.
Does that mean oil is going up, Glenn?
Yeah,
Gas prices going up.
You know, it is. Dude, let me like if we maybe talk about last year, it was like $6.05 for an entire 55-gallon barrel of oil.
Wow.
Back in 420. I think it was actually negative. It was, let me go with BZ Brent. It was BZ. Oh yeah, no. There was another oil market that was actually negative. It was crazy.
So free oil.
Dude, they're literally giving it away, man. Literally.
Literally. Wow.
But yeah, going back to the price action, right? If you could read price action, you can trade it.
Yep. That's facts right there. That's the bottom line.
And that's where you want to get to a point of just being able to read price action and able to just follow price. Because we know price is true, and to follow price. You can't control the market. Follow what it's doing. It's easier said than done.
Definitely.
But as far as that would be concluding our price action for trading topic 2 for now.